Will the next move in interest rates be up or down?
Well, we've removed today what we used to have was a sort of statement of bias, if you like, in the nicest sense of the word, that we thought the next move might be up rather than down, and so you can see that we've moved away from that. The second thing I would say is that I think that the issue for us is now then is not how tight do we have to have policy, how do we have to have it tighter, but for how long. Now, to be clear, I think that...
In other words, for how long should interest rates be at this kind of high level?
So I think, to be clear, I think therefore really the decision, unless the world changes, and of course unfortunately the world does change, and particularly at the moment, the next decision is more likely to be when do we cut.
Right, the next decision is more likely to be when do we cut.
But we haven't reached a view on when that will be.
But the point is that moment is getting closer, isn't it? We're not there yet, is that your point?
We've had good news on inflation. It's come down faster than we thought it would. Some of it is not going to be sustained because it's a particular effect with energy prices, but still we've had good news. So that encourages me, and I think it's right that we've changed the framing of the decision now.
And they're talking, I mean, that is quite a big moment for the bank to be kind of explicitly talking about those rate cuts. And presumably that does it from the fact that you've made some big changes to your inflation forecast today. So can you just explain, I mean, it looks like inflation getting down towards your target in the coming months.
Well, a number of things have happened in the 3-month period since we published the last one at the beginning of November. So first of all, we've had quite a marked fall in energy prices. And remember, that's against a backdrop of these tragic events in the Middle East. So, that's important. It wasn't news that we were expecting, but it's important news, particularly in gas prices, for instance. And that obviously has a sizable effect on the forecast. Now, we've also had quite a marked move down in what the markets think interest rates are going to be, and what we condition what we use to, in a sense, set our forecast up. Now, that does, further out, tend to push inflation up a bit because it means that conditions are a bit looser, but on the whole, it's a reflection of the changed world we're in.
So just to be clear, inflation, it was up at kind of double-digit levels.
Yeah.
It's now getting close to your 2% target.
Well, it's at 4 at the moment, yes.
It's at 4%, but you think it's going to hit 2% potentially in the next few months?
We think that by the spring, we could see it at 2%.
So does that mean that effectively the cost of living crisis is now over or very nearly over?
Well, I'm optimistic, and we think that we will see it at 2% in the spring, but we don't think it's going to stay there. Now, but I want to be clear, because obviously we've had big and very difficult movements in inflation. We think it's going to pick up somewhat, but nothing like what we've seen. So we're saying a bit under 3%. It could go back to later this year. Now, that still leaves us with that's the challenge for us to get it down to 3%. But we're talking about, you're right, we're talking about smaller numbers, much smaller numbers.
But how much of the fall, would you say was down to higher interest rates? Because, this has been a period where a lot of people have been struggling. There's been a lot of pain throughout the economy, throughout households, millions of people around the country. So people have felt this pain.
Yes.
What can you tell them about the extent to which that pain was worth it?
So there are two things going on. It's an important question. There are two things going on here. Very directly, I think most of the fall is down to us coming to the end of these global shocks, if you like, these global events, the post-COVID events, the impact of the war in Ukraine. In terms of inflation, this thing is now it's coming towards its end. But that's not the conclusion of the story, because raising interest rates, I'm afraid, would never have made those shocks go away in the sense that they're happening.
So why did you do it in the first place?
That's the point. The reason we did it, I've said a number of times, is that the risk is that those global shocks get embedded into domestic inflation. These what we call second round effects, that they get embedded into the system and we can't get them out. And that's where interest rates have done their job. Now, I think they have done their job, because I think what we're looking at now is a lower level of what I might call persistence of inflation than we feared we would be dealing with, given, as you said, that we were up over 10%.
So it's mission accomplished now, is it?
No, we've still got to get it down to the 2% target and stay there. That's the mission, has to take us there, because that's the best thing that we can do for the people of this country.
You said that obviously the next move, all else equal, is more likely to be a cut than a hike. If you were to leave rates where they are at the moment, or indeed to raise them,
yes.
what kind of world would we be looking at in that scenario?
If we were to say to people, and we're not going to do this, by the way, but let's say we said to people, you know what, rates are going to stay where they are for good, as it were. Then you would get a very big adjustment in expectations, you would get a very big adjustment in markets, and we think, because we do this in a sense thought process every time, looking forwards, we would see inflation below target. Now, we don't want, I mean, to be clear, of course, the target is
what
symmetric.
else, at what cost, though?
Well,
to the economy?
Of course, there would be substantial cost to the economy.
There would be a recession, presumably, would it?
But moreover, we don't. That of course is not our target. Our target is symmetric. We are as concerned about inflation being above target as we are about it being below target.
And are you going to be watching like a hawk what happens to fiscal policy in the coming months? Because obviously your decisions depend on what's going on in the economy, but they also depend on whether the government is kind of pouring more cash in. So will that be a judgment you will take about whenever you decide to cut interest rates?
Well, we watch fiscal policy very closely, and we take its implications and its consequences into effect. I don't preach on what fiscal policy. That's for the
Of course. I'm just saying it's part
of your.
Yes.
I mean, obviously, when fiscal policy is announced, we take it into account.
And so if
we have done this time, because we've taken the autumn measures into account this time.
But you said with the autumn measures, you said actually they were kind of maybe less inflationary than they could have been, but still they were net inflationary. So these things matter, do they, when you're making your decisions?
They enter into the whole assessment process.
Okay, so that is part of your decision making. And when it comes to the state of the economy at the moment, I mean, would you say we are kind of racing ahead? Would you say we're flatlining? How are we actually doing right now?
Well, we have. I mean, if you look at last year as it's evolving, we had frankly a very flat outturn as far as we can see. We're not currently forecasting a recession at the end of last year, but it's somewhat in the balance, to be frank. But I think that's not the main point, and I wouldn't get too focused on that. What we have seen, interestingly, since sort of right at the tail end of last year, going through January, is actually some encouraging pickup in quite a few of the indicators of activity in the economy. So some of the survey evidence, look at actually the housing market as well, actually. And that has supported our view that we are going to see a gradual pickup in growth in the economy going forwards. So
final point, just kind of taking it all into account. People can take from this that the economy is in a better place than it was. Inflation is looking in a better place than it was not long ago. Some of that pain, some of the work was worth it, and that the next move is more likely to be down than up.
Yes.
Right, okay.
That's pretty fair.
So people are going to be kind of pretty encouraged by that, I think.
I've said a number of times today, I think we've had good news. Now, of course there are still risks out there. You always expect a central bank governor to say that, but there are. I mean, there's some tragic events going on in the world around us. But there is good news in there, yes.